broader end of the market, the mid cap and the small cap end. Just to take you through what is happening over there, let's take a look at what's happening with the Nifty mid cap, the Nifty small cap, and take a look at if they are seeing the spike or a little bit of recovery that the Nifty 50 is seeing right now. So if you take a look at the Nifty mid cap in tandem with the Nifty 50 right now, about 1/10 to 2/10% higher. The small cap on the other side is seeing cuts of about 0.2%. So that is the segment of the broader market that is currently under some pressure. So these are some of the that is the levels rather that we are watching on both of these indices. But you have ITI, Polymed or NBCC, some of the top gainers from the mid-cap end. On the flip side, transformers and rectifiers, TCM Shriram and HAL along with the Garden Reach are all lower in trade. But with that, let's welcome on board the management of Ventive Hospitality and let's get chatting with multiple managements on the show. The first of them being Ventive Hospitality. We have Mr. Ranjit Batra, the CEO, joining us on the back of their expansion plans and their new a new acquisition of a resort in Goa. So, sir, morning, and if you could elaborate on the strategic rationale behind acquiring a majority stake in Soham Leisure Ventures, the expected business synergies over there, and the financial impact this will have on your consolidated portfolio.
Sure, I'm happy to talk about that. You're referring to Hilton Goa, which is part of the Soham Leisure, newly acquired asset in our portfolio. I think it's a very strategic move. This particular resort is in Saipan Hills overlooking the Nerul River. So great setting. It's already a solid performer. It does ADRs around 12,000 with 76% occupancy and 18 crore EBITDA. So that's a great buy. And also, we acquired at a very attractive price. So the real upside is what Ventive does well, basically refurbishment, repositioning, and activating F&B, etc., and product development and enhancing. That's exactly what we're going to do. We're going to be adding 60 to 65 rooms as well in the existing hotel. And there is a possible brand upgrade with Hilton to a higher brand. This goes in conjunction with the 4-acre land parcel that we have with where we'll do branded villas. So those villas alone will add value and help reduce our net investment. So that's pretty much our story in Goa. From the hotel acquisition perspective, I think once Ventive comes into play with product uplift, enhancement, and additional offerings, we'll see a clear path of almost doubling the EBITDA in a few years.
All right. Hi, morning, Mr. Batra. This is Shrishti also joining in. But if you can help us understand, how did the occupancy and revenue per available room trend was seen to be shaping during Q2? And what is your outlook for both the metrics for the second half of this fiscal?
So Q2 has been an exceptional quarter for us. This has been one of our strongest. This is our strongest quarter. Usually Q2 is a quieter quarter for the industry. Let me break it down. In India, our strategy was ADR, and that's exactly what we did. Our ADR grew 12%, RevPAR grew 13%, and TRevPAR grew 14%. And occupancy was pretty steady. So I think there was some geopolitical slowdown that led to some small blip, but that's over. On the margins, they expanded pretty sharply, almost 900 basis points to 41%. That's also super healthy. In Maldives, it was occupancy led. Same store occupancy grew 4 points, and including Raya, it was up 8 points. So RevPAR grew 9%. Same store EBITDA was up 91%, and margins expanded around 700 basis points. So very healthy outlook for the Q2.
Okay, so that sounds good. You've had a good quarter too, Mr. Batra, but could you also provide an update on the performance of your international portfolio? You did speak about Maldives and any share in any upcoming expansion or development plans in those markets, if you could just throw some light over there.
So our international portfolio, there are 3 resorts in Maldives, and we are building one Ritz-Carlton Reserve in Sri Lanka. Exceptional quarter for them as well. Revenue grew very strong, 40% up, same store 9%. I think Conrad, Anantara were real winners, and the newly entry of Raya has had exceptional performance in the first year alone. There's a huge margin expansion there as well, 7 percentage points. So this came in through commercial strategy, and a new refurb of Conrad and Anantara also helped us to reposition those resorts. But we are still fully focused on our new expansion, which is Varanasi, Ritz-Carlton, Sri Lanka, and the three Moxies in JW in Navi Mumbai through our OFO pipeline.
All right, and lastly, Mr. Batra, what is your assessment of the demand trends across the corporate travel as well, MICE and the wedding season, and how these things and segments rather shaping your near-term performance expectations?
This wedding season has been quite a major driver this year. I think there's a lot of auspicious dates that is yet to unfold. Corporate traveler slowed down a bit in Q2, but we've seen Pune and Bangalore both coming fully back, especially with the MICE and solid corporate and project-based movement. So that automatically converts into MICE anyway. And for leisure side in Maldives, we've entered the best period, Christmas and New Year, and we're seeing excellent pace across all our resorts. So business travelers, MICE, weddings, leisure, all demand drivers for second half, very, very robust.
Okay, on that note, Mr. Batra, we'll let you go. Thank you so much for your time, and thanks for joining us and sharing your growth outlook with us as well. On that note, viewers, it's time to slip into a very short break. We'll be right back.